Are you traveling this summer? Maybe to the Olympic Games in Paris, or to go there to see Taylor Swift's Eras Tour? Our next guest sees signs of life in summer travel in the U.S. and abroad this year. Here to talk more about it is Kevin Davis, CEO of JLL Hotels and Hospitality Americas. Of course, he was in Paris this week to see Taylor Swift. No, I'm just kidding. I don't know. Maybe you were. You could have been.
You told me something I didn't know.
So, yeah, where are we seeing the flows happen here when it comes to hotel activity, when it comes to travel activity?
So we are incredibly optimistic about summer travel. It's interesting. We expect a lot of people to hit the roads and take to the skies. If you look at AAA surveys, they expect travel will be up about 4.5% this Memorial Day relative to last year, about 2.5% compared to 2019, which is a benchmark year for us. So we're really excited about that. If you look at the airlines, United Airlines, for example, expects this to be the most traveled Memorial Day in the history of the company. So
Wow.
They expect 3 million customers that weekend, so they're preparing for that. So if you look at the trends, we are very bullish about people taking to the roads and to the skies this summer and staying in hotels.
And Kevin, when you look at hotels, are there certain kind of sectors where you expect to see more activity than others? You know, luxury, for example. Where's it going to see most activity?
So performance of luxury hotels has remained strong post-COVID and continues to remain strong. So we expect that luxury will continue to perform. We also think that urban hotels in the major cities, what we would call big box and or full service hotels in the big cities, will continue
Remind
to
me
perform.
again, Kevin, what's a full service?
So it's a hotel that has rooms and then also food and beverage, and typically meeting space as well, compared to a select service hotel, which generally has skinny down food and beverage offerings and typically has very little to no meeting space.
So like room service versus no room service, probably.
That would be a full service hotel.
That would be one
Yes,
indicator.
Yes, that is correct. But we expect, look, if you look at the internet searches, a lot of queries about Orlando, New York, Los Angeles, San Francisco, which is an interesting market because that has been a troubled market, but we're starting to see some green shoots with travel to San Francisco. So we're excited about that.
Well, that's good. That's a great city to visit.
One of the world's best.
We know it well. You know, when you talk about the increase in travel and what the airlines are seeing, obviously they have had their own troubles because of capacity, because of what's going on with Boeing. I'm curious about capacity in the hotel business, especially you have Airbnb, you have Vrbo, you have other things. How's this sort of supply-demand match in the hotel business?
So one of the interesting things, I mean, both can coexist healthily. We've seen that. We have seen a recovery in occupancy in traditional hospitality, but frankly, we are not back where we were pre-COVID. I think part of the reason is because hoteliers have generally pushed rates, average rates, pretty significantly. So it's just more expensive to stay in hotels, and they've sacrificed occupancy as a result. But we are starting to see occupancy recover. Leisure travelers have been back since 2001. They were the first to hit the road post-COVID, but we're seeing a return of group travel, so meetings, and also corporate travel, which is another thing that's driving our occupancy. On the Airbnb side, they've seen some slippage, but at the end of the day, we think that Airbnb and or short-term rentals will have a strong summer, as will hotels.
And Kevin, what about hotel investment? I'm just curious what kind of trends, themes you're seeing so far this year.
So investment activity is down about 38% compared to last year relative to the larger transactions that we typically track. I think a big driver of that, frankly, is just interest rates and the high cost of debt. If you go back to early 2022, before the Fed started raising rates, you could borrow against a hotel at 4 or 5%. Today, that's 8, 9, or 10%. So because the cost of debt has gone up so much, it's really curtailed investment activity. And we saw that in 2023, and we're absolutely seeing that continue in 2024.
And the projects that you're seeing, is it more construction or is it more renovation? I mean, when you're talking about, for example, urban, where you're seeing a resurgence, I would imagine you're not seeing a lot of new hotel building, but you're probably seeing some revamping.
That's correct. We are seeing some new construction, but it's very expensive to construct. We had a significant run-up in inflation, which has affected all aspects of the industry, but it's expensive to build relative to buy. So in many cases, you can buy an existing hotel at a 30 to 40% discount relative to what it costs to build.
Wow.
As a result, you have more people buying, and the cost of capital for building is incredibly expensive. So most of the activity, investment activity that we're seeing, you're seeing it in urban hotels, big city center hotels, but you're also seeing it in resorts, which is an area where we've seen a lot of investment post-COVID, which has continued. I'd say probably the biggest change or the one constant in most of the deals getting done today is people are generally buying hotels with existing cash flow. There are exceptions to the rule, but because the cost of debt is so high, it's important that the hotels generate a reasonable amount of cash flow to help cover the cost of debt service.
And Kevin, when you talk about hotel investment, are there differences regionally to call out that are significant?
Yes, I would say absolutely. Look, you've had a recovery in some of the urban markets like a New York, like a Boston, which markets frankly lagged in the recovery post-COVID. So you've seen more investment in those markets. And again, you're still seeing investment in some of the coastal and resort markets. I would tell you that some of the states, frankly, which had a lot of investment post-COVID, Florida, for example, you've seen a step down in investment activity, but we expect that it will resume in the near term. But it's driven by the fact that there was such a high peak, so we're down relative to that high peak.
Kevin, can we ask a hotel guy, what's your favorite hotel to stay in?
Oh my gosh, all my children are beautiful. I can't answer that.
Come on.
I can't answer that question.
Good
right.
answer, Kevin.
Right? There you go.
You can tell us off camera.
Kevin, thank you. Always love having
Thank
you
you.
here.
We appreciate it.